How was modern Islamic banking revived? Imagine a time when Muslims around the world wanted banking options that followed their faith. That moment marked the beginning of a new chapter in Islamic finance. The revival of modern Islamic banking started in the mid-1900s, driven by a desire to create financial systems free from interest, which Islam prohibits. Early efforts by Islamic scholars and activists focused on developing banking models based on profit and loss sharing, like mudarabah, where banks and clients share risks and rewards instead of charging interest. A major milestone was the opening of the MIT Gammer Savings Bank in Egypt in 1963. It was the first modern Islamic bank, operating without interest and offering savings accounts based on Islamic principles. This bank proved that Islamic banking could work in practice. Then, in 1975, Dubai Islamic Bank was founded. It was the first full-fledged commercial bank to apply Islamic rules across all its services, setting a clear example for others to follow. Around the same time, the Islamic Development Bank was established to support economic growth in Muslim countries through Shariah-compliant financing. The 1970s saw a surge in political and economic awareness in the Muslim world, especially with the rise of petrodollars. These large oil revenues provided the capital needed to fund Islamic financial institutions, giving them a boost. This period also marked a push to regain economic independence from Western banking systems. To make Islamic finance more standardized and trustworthy, organizations like the Accounting and Auditing Organization for Islamic Financial Institutions were created. They helped develop common rules and guidelines for products like Sukuk, which are Islamic bonds, Takaful, or Islamic insurance, and Islamic microfinance. These products follow Islamic laws that forbid interest and promote ethical investing. The revival also involved reconnecting with the rich history of Islamic finance, which thrived before colonial powers replaced many of these systems with Western models. Colonialism had led to the loss of many indigenous financial practices, but the modern revival aimed to bring those traditions back in a contemporary way. From a rules perspective, this movement emphasizes avoiding interest, sharing risks fairly, and investing ethically. It also calls for transparency, assets backing financial products, and avoiding exploitation. This approach aligns with Islamic morals and legal principles. In short, the revival of modern Islamic banking was driven by scholars reinterpreting Islamic law for today's finance, pioneering institutions in the 1960s and 1970s, economic shifts fueled by oil revenues, and the creation of regulatory bodies. This movement continues to grow globally, offering financial services that respect Islamic values and legal standards.